Hey everybody, welcome back to the channel. Today I want to go over the London Silver Bullet for Tuesday, July 11th. And as you can see, here's the Asian range, and here you can see that we've come up through that. We've taken out the high. When we come to the chart, this right here is 2 a.m. This dark gray area starts the 3 a.m. Eastern Time Silver Bullet hour. This is that dark gray area. That's what we'll be talking about today. We see that we have a high here, and we see that there's a fair value gap here that this trades into before our silver bullet hour. Now there's no market structure shift. I'm just pointing out that that fair value gap was respected by this and traded down. For me, I would look for this low to be taken out for a market structure shift. I'm just pointing out that this was respected, okay? So as we come down here and trade through this, I see a market structure shift. Why? This is the swing low, and this is the swing high. This is the highest point right here. So this started this swing, this move that took out everything. This made the high, right? So this would be the market structure shift. This is not a market structure shift to me because it made this high, didn't take out this high, right? That's just me. That's just how I look at it, okay? So price trades down and then trades back up and takes out these relatively equal highs right here. So buy side is taken right here. You actually extend this to here. Okay, and then as price trades back down, we see a fair value gap right there. And price comes back up, trades in to the stops right at consequent encroachment of the fair value gap. So you can take your trade there and enter at the start of that fair value gap. Now for me, my rules are my stop has to go at least to the above one tick above the first candle of the 3 candle pattern for the fair value gap. Okay, well that's right here. And in my other videos, I also say that when it's like this, I will put I'll make my stop larger, and I'll go 1 tick above the high if it's just right there. It's so close to being taken above the high. I'll go 1 tick above. If this high was way up here, my stop would just be 1 tick above the low. But since we're talking 1 tick to be at the high, I'm going to add 2, and I'm going to be 1 tick above the high. Okay. We aim for at least 5. 5 handles. We're at 1 to 2, so that's good. We ideally want to go down here, which would be down here. But right now, there's our 5 handles. Where would we take our partials? Where I see that there's some relative equal lows right here, so I would take my partial right there. My eventual draw would be this low over here, because you came down here. This is one of the lows. Here's another one. So that's where I'd be aiming for right there. As price comes back through, comes up, and you see this fair value gap right here. It's being respected by the bodies. Look at that. 5 candles right there. Comes back in over here. Well, that makes that a breakaway gap. Price comes back in, and then look at this. There is no wick, no anything in this area right here. That is a liquidity void. So right there is a liquidity void. We highlight that. And then price comes up and price comes up and down into that liquidity void, filling in that gap. Okay. When it does that, I'm taking that trade to go short. And put your stop there. I'd go above the high, 1 tick above the high, and then still aim for that same liquidity draw. And do we get at least 1 to 2? We do. It's actually 3.33R, but we do. So we're still targeting this draw on liquidity. And price comes back down, and then our first target was hit right there, taken out right there, and then price came up, came down, and took out our second order right there. So that is your 2 silver bullet trade setups for London on July 11th.